Good morning, everyone. This is Black Forex. We're going to be breaking down. We're going to be making a video today breaking down what's going to be happening with gold and what's going to be the outlook on gold going into this trading weeks and the future trading weeks to come. Okay. So remember that this video is for educational purposes. This is not financial advice. But now that we got that out the way, let's go ahead and break down this article to explain what's happening with gold. We're going to touch on a few key points in the article, and then we're going to give you a good fundamental economic analysis on the outlook of gold and how you should look to trade it for this upcoming trading week and future trading weeks to come. Okay. So gold began April trading at a fairly large slide on the week as the U.S. unemployment rate fell despite an underwhelmingly monthly addition in the jobs that suggests the economy may not fare too badly, reducing the need for investors to rely on safe havens. Okay. So basically, even though in the non-farmers job report, it did the number that came out wasn't as high as it was previously or what it predicted, but we did have a drop in unemployment. Unemployment number was I think 3.6. So we did have a drop in unemployment, which you have to understand the way gold works is an inverse to the US dollar. So anytime the US dollar starts to gain strength, gold gets weak. Anytime the US dollar gets weak, gold gets strong. Anytime gold is strong, the US dollar is weak. Every time gold is weak, every time gold is weak, the US dollar is strong. So you have to understand gold and the US dollar has an inverse relationship with each other. So when one is up, the other is down. And the prices of gold is going to be a good litmus test indicator to let us know how strong the US dollar is doing. Okay. Now, what it says as it acts as a safe haven, we're going to get into that also in this article too. Okay. Now, it says gold typically serve as a hedge against economic and political troubles. That's it acting as a safe haven. So anytime you see a trouble, a geopolitical troubles in the world that can cause the world to panic, just like we have the Russian-Ukrainian incident, you will see an uptake in gold prices. Okay, if there's a doubt, if then we start to see FUD, fear, uncertainty, and doubts around the US dollar, that's the economic portion of it, you will see gold prices start to go up. Okay, so in March, the comments front month contract got as high as $2,070 and just reached $42 from rewriting below August 2020 record high of 2,121 aimed at a turbocharged U.S. inflation and a bubbling geopolitical tension right after the Russian invasion of Ukraine. Okay, so basically what they're saying is that gold prices started to shoot up because as we started to have more and more increased inflation in America, we had a more and more weakening dollar, and more of a weakening dollar caused gold prices to go through the roof. Also, coupled with the fact that Russia invaded Ukraine, that also catalyzed gold to go through the roof. So the weakening U.S. dollar and the global market started to be in panic due to the Russian invasion of Ukraine. That brought gold prices through the roof. Okay. On Friday, though, the gold fell as the U.S. job rate fell to 3.6%, just like we said earlier, in March from 3.8 in February, despite jobs growth from the coming month of 4,000 from 431,000, some 12% below economists' expectations. Well, even though that number wasn't what they thought it was going to be, that's still 400,000 jobs being added to the economy. Okay. Now, even though that number wasn't as large as big as they thought it was smaller than it was previously, and smaller than what they forecast it was going to be. That number was enough to actually bring the unemployment rate down. Okay, so this is what I mean with fundamentals. You can't be so stickler to the numbers. You can't be so stern, like, okay, the numbers do this, so we do that. You have to see how all these numbers coincide together and how they actually affect and move the markets. Because when this news came out on Friday, all the USD pairs started showing strength, right? And the gold started to fall too. Okay. And that's because even though that number was smaller, it did increase the unemployment rate, which is very important. Okay. So now we're basically in a situation of that we're going to be really heavily watching gold to see how this plays out with the economy. If gold prices continue to go down, that means inflation is being curbed and the US dollar is getting strength. But if we start to see gold prices is creeping up, that means that the US dollar is losing strength and inflation is going to be picking up as well. Now, what is going to dictate that is the gas prices, okay? Because we're going to get into this in another video, but just to give you an overview, if gas prices continue to pick up, that's going to be less money getting spent in the stores because that's more money is getting spent in pump on the gas pump, which means that um, the economy is going to start to stagnate and shrink if we don't have money going into the economy and it's all going into gas. Okay. So we could still have further inflation if we don't take an active role in correcting our oil issues here in America. Okay. And what's going to dictate and what's going to really show that is the price of gold. So if gold continues to go down, that means our economy is doing good and the American economy is getting stronger. But if you start to see gold prices picking up, now the only way gold prices can pick up, right? And it'll be kind of not related to the strength of weakness of the American economy will be solely due to geopolitics. If we start to see heavy aggression between Russia and Ukraine, or Russia starts to have further issues with other NATO nations, that will cause panic in the markets, and that will cause gold to rise up, and that would be outside of what is happening with the American economy. Okay. But if geopolitics kind of stay as it is, with this is just being a Russian, Ukrainian, European conflict, not looking like it's going to break out to a full scale European war, then gold is going to be our indicator, is going to be our litmus to let us know how good the American economy is doing. If gold continues to go up, that means that inflation is still hanging around, it's not being combated aggressively and expeditiously, which means that we're going to be further into inflation, looking at recession very, very, very soon. Okay, but if gold prices continue to drop down, that means that we should see a strengthening of the U.S. dollar, and that means that with the strengthening of the U.S. dollar, that means our economy is growing and the economy is doing well, and inflation is being combated very aggressively and expeditiously. Okay. I hope this information was helpful for you guys. Happy trading.